Tina Johnson, Gateway First Bank Community Mortgage Center. We are happy to be here in the community and we're here to serve you. As promised, we're going to talk about those credit utilization ratios. It's the measure or the proportion of your credit that you are using in terms of a percentage. So what you would do, how would you calculate that? You would divide your balance by your available credit, multiply that by 100, and that will give you your percentage. Ideally, you want to stay around 30%. Don't go over that. Ideally, sometimes there are different situations that happen, but no worries, I'm going to equip you with the information. The magic percentage is 10%. That will give you a boost. So if you're not using over 10% of your credit, that will pretty much have you increasing your score. The credit utilization ratio is very important because it can negatively impact your score. So knowing what to do and knowing how to do it is very important. It's important to know on those credit cards what your, for several things, what your billing cycle is, what your due date is, what your APR or annual percentage rate is, and if there is a late fee, if there's a late fee, if you're 1 day late, is there a grace period? Why? For example, if your minimum payment is, let's say, $30 and there's no grace period and you're 1 day late and the late fee is $39, you will not be able to reduce those balances by making payments 1 day late. So you get to choose the credit card companies when you have that credit that says that you're responsible. You get to choose who you want to do business with. So it's important in knowing that information. And so those are some great factors to know. Those are some very important factors to know. As well, you want to make sure you keep an eye on those balances, because there are times, unfortunately, when a credit card company will reduce your balance. And that will, reduce your available credit. They will reduce your available credit. And that in turn will do what? Increase your credit utilization ratio. Know that you are the consumer, and so you have a lot of power, if you will. If that happens, you can call them and ask them why that happened, and if it did happen, ask them to go back and increase it. Also, if you need an increase in your score, an increase in your limit, you're a diligent paying customer, you can ask for that credit balance to be increased. The idea is to use the credit to your advantage. So it would not be good to have maxed out cards. I do realize that we are living in a time where we're just having to budget tightly and just we need some help. And so knowing what to do and knowing how to do it is very important, because even during these times, you can take care of your own situation. You can set attainable goals and you can achieve those goals while improving your score, so that if you are renting and you want to buy, this puts you in a position to be a very good steward of your own finances and to become a homeowner. It is very empowering. So, and also when you have those home ownership counseling classes, the information will mean more to you. So know that we do have the Gateway to Financial Freedom series at no cost to you. We will come to a small group setting. We will come to a large group setting. We can schedule it at a place that you would like, or we can schedule it at our conference centers that are available to us. So I do encourage you to just go over those credit cards, look at them. Don't be so quick to close an account if it's been open for a long period of time, because the length of time that you have accounts is a factor in your score. Again, there are many moving parts, and there is a lot of information, so we're going to go over this in several segments. For now, that credit utilization ratio is a measure or the portion of the credit that you are using in relation to those revolving accounts or your credit cards. Tina Johnson, Community Mortgage Center, Gateway First Bank. Have an amazing day.